This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Historic vote. The FCC approves sweeping new rules for the internet, giving the government greater oversight of one of the nation's most important economic engines.
Black and blue, IBM CEO announces an ambitious spending plan, but was she able to win over Wall Street?
Feeling the pressure, why our nation's airline industry is overloaded and under stress. All that and more tonight on Nightly Business Report for Thursday, February 26th.
Good evening and welcome, everyone. An historic day in Washington today, and here's why. Nearly 90% of American adults use the internet, and today a landmark decision in the nation's capital ushers in a new era for internet use. The Federal Communications Commission approved sweeping new regulations in support of so-called net neutrality, ensuring that all internet traffic is treated equally. Now, the goal is to prevent internet providers from controlling what online content people can access. Content can't be blocked, deliberately slowed down, or sped up for a price. Critics who vow to fight the ruling in court say innovation and investment in the internet will be stifled. And as Eamon Javers reports, the vote itself was divisive and contentious.
This is what democracy looks like.
It was the end of a long, hard-fought battle over the future of the internet as the FCC commissioners voted 3-2 to pass new rules that would block internet companies from charging more money to certain websites or slowing speeds for others.
The ayes have it.
Before a standing room-only crowd, the FCC for the first time voted to regulate the internet like a utility and to enforce so-called net neutrality. The fight pits some big content-producing firms like Netflix and Twitter against some of the big internet broadband service providers like Comcast and Time Warner Cable. And it's also provoked some sharp divisions here on the commission itself.
The internet has become a powerful force for freedom, here and around the world. So it is sad to witness this morning the FCC's unprecedented attempt to replace that freedom with government control.
But the deciding vote came from FCC Chairman Tom Wheeler, who'd been prodded along by President Obama late last year.
This is no more a plan to regulate the internet than the First Amendment is a plan to regulate free speech. They both stand for the same concept: openness, expression, and an absence of gatekeepers telling people what they can do, where they can go, and what they can think.
I'm sorry, but we can't let you go to work today.
Last year, pro-net neutrality protesters blocked FCC Chairman Wheeler's home driveway as an effort to push him toward this FCC vote. So for now, the internet activists have won a big regulatory victory. But now the battle is likely to move to the courts as companies challenge the FCC's move on legal grounds. For Nightly Business Report, I'm Eamon Javers in Washington.
Comcast, one of the internet service providers Eamon just mentioned, is the parent company of CNBC, which produces this program.
Verizon was one of the internet service providers that was against the FCC's decision, and the company got rather creative to drive home the point, releasing a statement in old-fashioned typewriter font to speak out against the decision, saying the broadband rules were, quote, written in the era of the steam locomotive and the telegraph, end quote.
Craig Moffett joins us now to discuss what the new net neutrality rules mean for you. He's founder and senior analyst with MoffettNathanson. Craig, welcome. Good to have you with us. The real question is, what does this mean to me and what I will end up paying for my internet service? That's one baseline question. So the question really is, will this lead to higher prices for consumers or slower speeds than would have been the case if internet service providers would have been allowed to charge more to content companies to charge them more for faster speeds?
Well, let's start with the first part, which is what does it mean for you as a consumer? And the answer is probably nothing. Remember, this debate wasn't really about net neutrality anymore. It started there, but it really became about what's the regulatory framework, if you will, that allows them to have the statutory authority to do net neutrality. So there's been a lot of debate about whether this will actually lead to price regulation. It will probably lead to some imposition of new taxes and fees on internet service. So you could see some incremental increase to prices. But at least initially, it's not likely to lead to any real change in pricing.
You know, there's a lot of speculation that there are going to be lawsuits filed by some of those big companies who did not want this decision to go through. So we might not see the impact for some while, correct?
That's right. You're going to see now a protracted period of legal wrangling. Once this is published in the Federal Register, which could take a couple of months, you'll see all of the internet service providers file suit. They'll ask for an injunction to stay the implementation of the new plan. And whether they get it or whether they don't, it will start a long litigation process that will drag on for years and create a lot of uncertainty in the industry while it goes on.
It seems to me that both sides in this debate don't trust the other side. In other words, nobody trusts the government not to step in and try and regulate prices, and nobody trusts the big internet service providers not to throttle or charge to the content providers. Would we be in this position if there was more trust?
Well, Tyler, the irony here is that this debate isn't about net neutrality anymore, because remember, the internet service providers, Comcast and Verizon and AT&T, all agreed to abide by the principles of net neutrality voluntarily, and so what this really became about. That's my point, though. My point is that they've agreed to abide by the principles of net neutrality. What they object to is categorizing it as a Title II under the under the Telecommunications Act, a Title II common carrier. And on the other hand, the government says, well, we don't really want to regulate prices the way those common carriers are regulated, but no one trusts the other side. You're exactly right. And look, there are legitimate reasons to be concerned that even with the promise of so-called forbearance, or the promise not to impose price regulation, that this could turn out to be a slippery slope in that direction, simply because of the way the 1934 Communications Act was written. And look, at its very heart, the 1934 Communications Act is about price regulation. Mm-hmm. And so to suggest that you can impose a price regulatory act on an industry and then expect that it doesn't at least increase the risk of price regulation is probably being naive. Mm-hmm.
Craig, we could spend a very interesting hour talking about this, but alas, we can't. We'll have you back. I know we're going to visit this one again. Craig Moffett with Moffett-Nathanson.
On Wall Street today, the NASDAQ resumed its climb towards 5,000, while falling energy prices weighed on the Dow Jones Industrial Average and the S&P 500. At the close, the blue chip index fell 10 points to 18,214. The NASDAQ rose nearly 21 points to 4987, helped in part by Apple, which announced a special event March 9th, likely for the Apple Watch. And the S&P 500 dropped 3.
One of the companies weighing on the blue chip Dow index was IBM. Shares fell more than 1% after IBM's chief executive failed to wow investors at the company's annual meeting with analysts. The company announced a big spending plan, though, and set new financial targets in an effort to win back Wall Street. David Faber spoke to her today at IBM's Investor Day meeting in New York.
IBM's investor briefing in Manhattan has concluded. The big headline, the company's plan to spend an additional $4 billion on its key growth initiatives, social, mobile, cloud, and security, which represent about $25 billion worth of revenues right now. Its goal by 2018 to have those growth businesses represent as much as $40 billion of the company's revenues, or what they are saying will be roughly 40% of overall revenues. I asked CEO Ginny Rometty what gives her the confidence they can deliver on those goals.
We are a high-value innovation company. And to that point, some of the supporting facts, because as you know, when we did our earnings, and you and I had talked about this, we have come out and said these strategic imperatives, as we call them, all around the world of data, cloud, engagement, $25 billion. So what gives me confidence? They grew another very strong 16% at actual rates last year, and they are now 27% of IBM. So it was important. In fact, we went back in time. I told them, and we showed everyone today, they've been growing strong double digits for years. 5 years ago, they were only 13% of IBM. We started last year, they were 22%, now 27%. And in fact, we've got confidence. They'll continue to grow double digits, and therefore that leads you to $40 billion, which would be greater than 40% of IBM in 4 years.
It has been a hard road, of course, for IBM in the stock market over the last couple of years. Late last year, the company dispatched with its so-called roadmap, which had called for it to earn as much as $20 a share this year. Those numbers are just not happening for the company as it deals with flat to declining revenues in many of its older lines of business. Older, yes, but Ginny Rometty says they are still important components of the overall ability of the company to grow high single digits over the long term. For Nightly Business Report, I'm David Faber in New York.
And now to the economy, where consumer prices dropped in January. A plunge in gas prices last month lowered consumer prices by about 0.7%, the most in 6 years, and slightly more than economists had been expecting. Also surprising economists was the number of Americans filing for unemployment benefits, which jumped by 31,000 last week, the most since late 2013. Meantime, orders for durable goods, which are items that are meant to last at least 3 years, rose for the first time in 3 months.
And following 2 days of testimony on Capitol Hill by the Federal Reserve Chair Janet Yellen, Federal Reserve officials St. Louis President James Bullard and Cleveland President Loretta Mester were out today discussing not only monetary policy, but also the intense push by lawmakers to rein in the central bank. Steve Leisman reports.
Fed officials rallied to the side of Fed Chair Janet Yellen a day after she was accused of political bias by Tea Party members in the House of Representatives.
I think she's a very balanced and careful thinker on monetary policy. I really don't see these charges being well-founded.
In Yellen's testimony before the House yesterday, lawmakers pointed to her repeated meetings with the Treasury Secretary, as well as her speech about inequality just 2 weeks before the recent congressional elections, as proof of her bias in favor of Democrats and the White House. But Fed officials today said that nearly every Fed chair has held regular meetings with the Treasury Secretary, and that even Chair Alan Greenspan, as far back as 1998, spoke about the issue of inequality. Still, congressional Republicans stuck to their criticisms today.
This myth that's been out there that they've been promulgated for years or decades that the Fed is somehow totally independent of partisan politics entirely, and that for that reason they should not be held accountable on either front, on the monetary side or the regulatory side.
There's considerable support in the House for new rules that would allow greater scrutiny and control over how the Fed makes monetary policy, including a bill to audit the Fed's setting of interest rate policy, which is strongly opposed inside the central bank.
Audit the Fed, the bill that they were talking about, that's being talked about, I think is misnamed, and it's also misguided because it's not really about auditing the Fed. The Fed is audited, and I think Janet brought up the financials to show, we're audited, our financial statements are audited. It's really about having political interest infiltrate the decisions on a short-run basis.
Taking the politics out of setting interest rates and steering the economy is the exact reason the Fed was set up as an independent body more than 100 years ago. But it's unclear if in the hyper-political atmosphere of Washington, if any body or agency can remain above the fray. For Nightly Business Report, I'm Steve Leisman.
And joining us now to talk more about the Fed is Randall Kroszner. He is a former Federal Reserve governor. He is now professor of economics at the University of Chicago's Booth School of Business. Professor Kroszner, welcome. Nice to have you here.
Great to be with you.
Let me start, first of all, with the grilling that the Fed chief did take on Capitol Hill. In historical means, this is the most transparent Fed recently that we've had really in history, and yet she did take a grilling. What did you make of that whole scene on Capitol Hill?
I think part of it is that just the position of the Fed is very different than it once was in terms of the broader public. It used to be at the front page of the business section. Now it's the front page of the newspaper. Because of the financial crisis, people really realize the power that central banks have to try to prevent a depression, to try to prevent deflation. And so it's no surprise that even though the Fed has made a lot of steps forward in transparency, there's a lot more scrutiny of it than there ever has been before, because it's just more known how important it is. It was really just aficionados like academics and people like me who had had done work on it who knew, but then now everyone knows how important the central bank is.
The central bank has become more central, I guess, is what,
yes.
is what you're
more
fundamentally
central and
saying
salient.
here.
Yes,
you know,
exactly.
One of the things that Chair Yellen was criticized for was her meeting schedule. How many times she went to the White House, met with Treasury officials, compared with how many times she met with Congress, how many times she may have met with so-called liberal economists. Did you see, or do you know of any bias in her meeting schedule? Do you see any problems there?
I didn't see any bias. I think it's very important for the Fed chair to be talking to members of Congress, to talking to the Secretary of Treasury. That's been a standard thing done, as far as I know, for the whole history of the Fed, to have a good back and forth with other key decision makers. But it's very important to have that discussion. The Fed shouldn't be independent in the sense that they never talk to anyone. They shouldn't have political interference in the decisions, but they should be talking to key political actors on both sides of the aisle.
What do you make of her testimony on the state of the economy and what she's still worried about, the income inequality issues, the labor issues that are out there, the lack of wage growth? Do you, generally speaking, agree with her assessment of where the economy stands right now?
Yeah, the Fed is in kind of a tough position because the labor market is coming back, but not as strongly as we'd like, and inflation is low and actually seems to be moving downward rather than moving upward. Mm-hmm. And I still see that there are a lot of challenges in the labor market. We have not had a robust recovery. There are a lot of people who are not counted as part of the labor force, but are still looking for work. So that 5.7 unemployment rate is not really representing a robust labor market.
Back to the independence of the Fed, what do you think of the idea of either an independent or a congressional, quote, audit of the Fed and its policymaking?
I think, as you heard from Loretta Mester, and as Steve Leeson was very careful to describe it, it's not just a traditional audit, because the Fed is audited by a major mm-hmm. accounting firm. If you look at the Fed's website, you'll see on a weekly, monthly, and quarterly basis full accounting of all the assets that it holds, so it's really very transparent that way. They use that word, but it really means an oversight, in more than oversight, sort of an involvement in the decision-making about interest rates. And if you look at the history of banks that have been, central banks that have been more independent or less independent of the political process, the ones that have been more independent have tended to have lower, less variable inflation, and the overall employment outcomes have been at least as good and generally better and less variable when you don't have the political interference.
Professor, thank you so much. Please come back and spend time with us again.
Thank you.
Professor Randall Krosner with the University of Chicago's Booth School of Business.
And coming up, the clock is ticking on a potential shutdown of the Homeland Security Department. And today, the wrangling among lawmakers continued.
The price of crude oil fell to its lowest level in nearly a month during trading today as inventories continue to grow. West Texas Intermediate dropped 5.5% to $48.17, and Brent also fell. And the price of a gallon of gasoline is going in the other direction. It's up 77 cents in California over the past month, due in large part to the Torrance refinery fire last week.
Tomorrow midnight is the deadline to fund the Department of Homeland Security or risk a shutdown of the agency. The Senate has yet to vote on its bill that would provide the needed funding, and the House's next move is still in question.
President Obama told a left-wing blog that he opposes Senate filibusters. But he sat there like a bump on a log watching Senate Democrats filibuster the debate on this bill. So we're waiting to see what the Senate can or can't do, and then we'll make decisions about how we're going to proceed.
John Harwood in Washington covering the story tonight. That's amusing language, John. But if there's no funding tomorrow night, what happens? What happens at the airports?
It'll be limited fallout that will be visible to the public, Tyler, because most Homeland Security employees and functions are considered essential functions of government. What it means is that those people will do their jobs, but they won't get paid. Now, that's not sustainable over a long period of time, which is why we expect this will get resolved over the weekend. But I got to tell you, I'm sure our viewers are getting tired of this. It's certainly getting tiresome to those of us covering it, the way we go up to a brink of crisis without getting a solution.
Yeah, and do you think ultimately there will be a solution, John? And how long do you think? You said over the weekend, certainly, but they do tend to take it to the brink and then pull back a little bit. And it comes at a time where there's a lot of tension around the world in terms of terrorism and security fears.
It is really hard to believe, Sue, that the Congress could be so tied up in knots over this immigration issue that Republicans are complaining about, that they wouldn't fund Homeland Security. And that's why I think it will get resolved. House is still considering exactly what it's going to do. Senate is going to pass a clean funding bill that funds the department through the end of the fiscal year. Republicans in the House look to be going to a very short-term plan to fund it for 3 weeks, which means 3 weeks from now, we'll be right back in this situation.
All right, John, thank you very much. John Harwood reporting tonight from Washington.
He's got a lot of patience. All right, JCPenney posts a surprise quarterly loss after the bell, and that's where we begin tonight's market focus. The retailer's holiday quarter earnings disappointed. Revenue and same-store sales actually grew more than expected, but investors were not impressed. After the bell, shares initially plunged, but before the close, the stock was up 1.5% to $9.12. And Gap is forecasting a drop in profit for the year, blaming a stronger dollar and issues related to the slowdown at the West Coast ports. The company did approve a $1 billion stock buyback, and that sent its shares initially higher after hours. Before the close, the stock was up a few cents to $40.37. Also in retail, Kohl said its results in its holiday quarter topped estimates. It also hiked its dividend by 15% to 45 cents a share, which has a dividend yield of about 2.5%. It's also forecasting full-year sales above estimates. The shares were 1% higher to $71.96. It was the opposite story, however, for Sears. That retailer posted a loss, which was narrower than expected, but revenue missed. Same-store sales at its namesake stores and at Kmart fell. Along with its earnings, the company said it's proceeding with plans to split off a few hundred stores into a separately owned real estate company, or REIT. The stock slumped almost 5% to $36.05.
Barnes & Noble also announcing plans to shake things up. The bookstore chain will spin off its college books business from its retail and Nook units. The separation is expected to be completed by August of this year and will create two independently publicly traded companies. The retailer says the move will allow for better strategy and focus. Shares popped almost 7% to $25.92. Big dividend and buyback announcement from Anheuser-Busch. The beer brewing giant raised its annual dividend 46% and announced a $1 billion share buyback program. It's also forecasting better beer sales. That sent shares up about $3 to $127.49. And SeaWorld reported a wider loss in its fourth quarter as attendance at its theme parks keeps falling. The company has been battling negative publicity since a documentary out a few years ago argued that its performing killer whales shouldn't be kept in captivity. The stock there fell about 6% to $19.17.
And still ahead, crowded airports and packed planes. Antiquated infrastructure. Is our airline industry simply overloaded? And what's being done to alleviate that stress? United Airlines has issued an urgent warning to its pilots following near misses and incidents involving cockpit errors. The safety memo was first reported by the Wall Street Journal, and it focused on the dangers of poor cockpit communication and coordination. But as Phil LeBeau reports, these incidents may be symptoms of a larger issue facing the entire airline industry.
The memo from United Airlines to its pilots was blunt: follow safety procedures in the cockpit. It highlighted significant safety concerns following 4 events and near misses, leading up to the memo's release in mid-January. One of those incidents involved United pilots needing to do an emergency pull-up to avoid crashing. United says, "We constantly monitor flight operations data and regularly communicate the findings with our pilots. Our approach to safety is in line with the FAA's safety management system and enables us to recognize potential issues and adjust our actions to further ensure the safety of our customers and coworkers." While no one was hurt on the United flights, the warning highlights a growing problem for airlines in America. They are dealing with more congestion and more challenges from a system desperately in need of an upgrade.
You would think the benefit of being in an airplane, quite frankly, is that you'd be able to fly more or less in a straight line to your destination, right? But that's not what they do. It's really kind of these highways in the sky with a lot of separation between airplanes to compensate for the fact that that infrastructure is so old.
There are initial steps to update the air traffic control system with advanced software that should cut down on congestion and potential incidents in the air and on the tarmac, something needed as carriers move to add more flights in certain high-density hubs.
And you add another, 5 or 10% capacity to what we have now, and we would be back there in some of the busiest airports, and so you'd like to see something more proactive happening.
Adding to the stress the airlines are facing is a looming shortage of pilots, as many older pilots face mandatory retirement, while foreign airlines, especially those in Asia, are growing quickly and competing with U.S. airlines to hire pilots.
For U.S. airlines, these issues come at a time when profits are soaring, which has some critics calling for airlines themselves to pay for upgrading the nation's commercial aviation system, a move many admit is unlikely to happen. Phil LeBeau, Nightly Business Report, Chicago.
And that's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for watching.
I'm Tyler Mathisen. Thanks from me as well. Have a great evening, everyone. We'll hope to see you back here tomorrow.